What's going on, guys? What's going on, Renee? What up? What up? Give it a minute or two, let everyone trickle in just shortly. We'll get started. Let me take a look at something in the meantime, real quick. Let's see something. All right, clutch, we're good. Let me see something else. All right, guys. Let's kind of get started as everyone kind of trickles in here. Today was pretty much another day in this bear market rally. I kind of came on here yesterday saying that I was kind of remaining neutral to bullish. I think that this market rally still had a little bit more legs in it. The market kind of gave us a little bit of a fake out, and that's almost the flip side scenario what we had yesterday. We basically saw yesterday's price action. We had that red to green. Today they almost flashed us green to red, but we kind of held a pivotal level basically, which was that 372 half. That 372 half was a pivotal level that I was watching to pretty much go bearish. We held above that 372 half on SPY, and that was pretty much the key part of this entire move that I saw on that little dip. So, as long as I was in the mindset of though, as long as we end up holding that 372 half, that was going to remain a buy the dip spot. I know that Avery was kind of highlighting that also on live here, and he also dropped that information in the dojo channel for you guys. So that was a beautiful sign of that. But again, that was pretty much the key level. That was the level that I was watching. I think I pretty much highlighted your key levels that you were watching yesterday, and that 372 half was one of those levels. So where do I have us going here? Tomorrow, I do have us making a push towards 381 half and ultimately still sticking towards my target here of this COVID low anchored VWAP that's sitting at 384 half as well. To be exact, 384.36 is that exact level. So I'm still targeting that 384.36 level on SPY here for this upside. So it could be very possible that we end up closing this week out pretty strong here into tomorrow, or we end up getting maybe halfway there to that anchored VWAP, and we see this close out come Monday morning. So that's kind of where I'm at right now. I still think that we have one strong leg that's still coming up in the market, despite the fact that we end up having a strong day, which I kind of anticipated towards the end of the day here. I still think that we still have one more big leg that's coming up towards that anchored VWAP, sitting at that 384.36 spot, and that's what I'm going to be looking for. Otherwise, the only way that I'm likely going to end up leaning bearish here is if we break under this 372 half. That's where I'm going to likely end up leaning bearish, but I do have a little bit of a megaphone action you see off to the right here. You could also make somewhat of a case of an inverted head and shoulders. That SPY is playing out here off of the on the hourly here as well. So that's something that you're also watching here. I think this right shoulder is a little bit awky to say that it's more of a very convincing inverted head and shoulders, but nonetheless, it could make the case. It does have that peak that to the bottom here. That does make a case for that right shoulder. So again, 372 will be the line in the sand here where I turn bearish. Otherwise, I'm looking for continuation, targeting that 381 and ultimately 384 spot. All right. Other than that, I did also drop a chart here on Tesla. That was earlier this morning on my Twitter. I dropped that one before the market opened. The line in the sand that I was pretty much watching, very key level, was 702. That was the level that I was watching here to possibly play out in inverted head and shoulders as well on Tesla. But we ended up dropping below that 702 level. We dropped down to a pretty pivotal level here, in which you see was a prior support back from June 10th, and also a breakout spot from June 15th. We held that 685 level, and that was a level that you saw a beautiful reversal into the end of the day. So I'm gonna look to see if we end up continuing to hold that 685 spot here. As we see, it's back over 700. That 685 spot is gonna tell us whether we end up getting an exaggeration towards the downside. We get a break back right back down, and then we can start talking about this gap fill that's sitting here under 673. All right. Otherwise, I'm looking for a breakout here over 718. Then we can start talking about taking out that prior high from yesterday. That's sitting at 740.50, and then the completion of gap fill up at 771. All right. So that's pretty much your key levels, 702, 718, and then we can make our way towards 740 here that we're sitting at from yesterday's high. Okay. So that's what I'll look out for Tesla. Other than that, not too many names that are kind of sitting on my watch list. I know Shop was one that kind of played out for me. That was one that I was watching for quite a while. I had that since the ascending channel action that was going. As you see, it kind of broke out of that as well. It gave us a little dip, but that ascending channel just kind of shifted as we continue to go into this next gap fill that we had. The last time that I spoke about it, I think that was earlier in the week. I was talking about this gap fill towards the bottom here. Now we've actually just entered into another gap fill as well. That's been dating back towards June 10th. So that's pretty much entered here above 362.81. That's our next gap fill. I'm going to look for continuation on the completion of this one here, sitting at 371.05. So I'll watch for this one. If we do get that continuation to the upside here, like I'm pretty much anticipating here tomorrow, this is going to be one that I'll pretty much keep an eye on. Hopefully we get a nice little dip and rip scenario tomorrow. Maybe we get a dip down here towards 350-ish, to the low 350, and then we could take a beautiful rip back up to 370, 371 that is, and that'll be about an $11 move that you're looking at. So hopefully that kind of plays out. I'm gonna look to see if Shop ends up making another strong day, but that was a beaut out of Shop here, about a 7.5% day on that one. So that'll be on the watch list. Another one that stood out to me was also Amazon. I'm gonna also continue to watch Amazon. We do have this one pretty much making, I want to say it looks a little bit like a rising wedge kind of formation here that's going on, but it does look like it's curling up. I'm going to get more confidence on this one if we can manage to break over 113.45 here tomorrow. We break over that 113.45, you're looking at testing gap fill at 114.50. And I do have a pretty strong, I believe this is off a daily resistance here, that's sitting at 115.26 here, is what I'm going to be looking at. All right. So I'm gonna keep an eye on Amazon. That's another one that's gonna be pretty much in the line in the sand for me. Wayne, what's going on? Did I have a great day? Actually, I did have a great day. I actually took one trade today. That was literally one trade, and that was pretty much it. And that was all I did. That was pretty much off of Walmart. That was a banger that I ended up catching. I think someone in chat kind of brought it to my attention. I usually end up forgetting about it, but I usually like trading Walmart. So I took one trade on that. I had a decent sized position on that, and I got out with about 43%. But other than that, I was kind of in the lab, you would say. Just been doing some more work for TFC. As you guys have seen, I haven't been as active on live or in chat as much. Just kind of working on some back end stuff for TFC. So I'm gonna continue to do that. But the biggest thing right now is just continuing to stay disciplined right now along the way. All right. But other than that, not much else that's kind of on the watch list for tomorrow. I'm gonna wait to see what the market gives us. One that's been on my watch list as well for quite some time as well has been Facebook. This is one that we've seen the headlines that's been surrounding Facebook. We've seen that it's just continuing to just fade. I'm gonna look to see if there's any life that comes out of this one here. If we have one more strong leg, like I'm anticipating here with Spy, I expect Facebook at some point to kind of give us a little bit more juice than what it gave us today. Despite it ended up being what up about almost 2%. It wasn't that bad of a day that I ended up having, but I want to see that key break that we get over that 160.61 level. That's going to be the level that I want to see us break over. We break over 161. I have this targeting up towards 164 is what I'm looking at. All right. So that's another one that's kind of low key on the radar for me. I just know that it's been relatively weak compared to the market rally that we've already pretty much experienced. All right. Um, Wayne, Snow took off, Weber, CVS. All right, I'm gonna get to all of those right now. One quick thing that I actually did want to take a look at. I want to actually look at FedEx earnings. I know that we had FedEx earnings. Oh, wow, look at that. If I'm not mistaken, I remember someone actually asked me about FedEx earnings. Someone particularly was asking me about this, and they wanted to know if I was bullish or bearish. I remember now because I actually have the line pretty much sitting here, and I was looking at this towards 246 was the level that I was watching. I mentioned that it ended up breaking a downtrend resistance. We see the downtrend break right here from that prior high that we had dating back towards May 28th. You had a beautiful downtrend break, but if we get any kind of leg, any continuation out of this one to the upside here tomorrow, you definitely want to see this break over this 239 here. We break over 239 half, then we're looking at making a leg up here towards 246. So this is going to be one that's going to be quite interesting here going into tomorrow if the market does continue to stay elevated and we can see a beautiful continuation out of this one. So I didn't want to highlight that one as I kind of remembered off of the earnings. Someone mentioned that in chat. Wayne Six still not back. Mrs. Post with chatter and unusual activity. I know that he was out all week. I think he was out of the country for that matter. I actually messaged him, but I'm gonna have to see if I kind of escalate that. See if there's any kind of update from Sig about that. All right. Sorry about that. I mean, I don't know exactly what it is that maybe caused him to stop it, or maybe just the fact that he was out of town. But I'll see if I reach out to him yet again for you. All right. Let me take a look at the names that you guys kind of mentioned. You said Snow took off. I'm assuming it's earnings. Okay, no, it's not earnings. Today's price action wise, yes, that was a pretty strong move. That was a hell of a leg up that it ended up having. The beauty part about this one is that you had a beautiful downtrend break. That was pretty much the sign that kind of told you to pretty much go long. You had a beautiful downtrend break. Let me see if I can line this up real quick. There you go. So you had a beautiful downtrend break. You see that you kind of gapped right over that downtrend break. That was a beautiful move. The key was basically holding over 129. Once you ended up holding over that 129, you see the strong gap up that you had yet again, and continuation was sitting right over 138. That was the level that you were watching for that continuation. North, as you see, it had such a strong day, about 12.5% on the day. Now, where do we end up seeing some short-term resistance on snow here, I would be looking right around this level right here is where I'll be looking at for resistance. So if we get continuation on snow, I'm going to look to basically test prior resistance to support that we had. As you see, you had the strong leg down back dating back from about May 9th here. That ended up being a little bit of a stopping point. You broke down, retested before you made a low there. Ended up basically reclaiming it. You had a little bit of a fake out. It couldn't quite get a continuation out of breaking back over that level. Broke down, retested it yet again for the second time. So I'm inclined to say that you're going to end up seeing this test at 152, 152 half in particular. So that'd be about another $9 move to the upside that you're watching here on Snow. And that should see your next leg up along with the broader market as well. So 152 half would be the spot that I'm looking at for continuation on Snow. And you may very well see that here tomorrow, if not on Monday into that resistance, in which I would expect it to basically take a U-turn right back to the downside. All right. So 152 is the line in the sand. In terms of the level that you need to hold to see that continuation continue, would be 138. 138 would definitely need to hold here to get that continuation towards that 152 spot. All right. But that was a hell of a move out of snow. That gap up was pretty wicked, and you definitely wanted to see it hold that 129, and that was a level that was pretty much pivotal for it to get that strong gap up that it had off of that. All right, but that was definitely a good catch on that one for rewind. The other one was Weber, and I think this was a short squeeze that just went pretty beautiful. I know that Tom ended up calling this one out. I think, if I'm not mistaken, you had a beautiful move. Where was that pretty much that key break that you're watching? The key break that I would have been watching here was right around this level where you had that breakdown. This is that key level that I would have been more, pretty much saying, you know what, this is like you're gonna have some legs on it because you see that you went down to that support level dating back from February 14th. You kind of got a little bit of a decline. You got a tight consolidation just basing off of that level of that 860 spot. Once you broke that 860 spot, it was pretty much hell breaking loose. You got the completion of this tiny gap fill that was a little bit left incomplete here from May 23rd, sitting at 10.93. And then you ended up going to where you had your prior consolidation to prior distribution, which is pretty much sitting in this box. This is what you basically look at as your distribution here. So you got to the top of that. That was basically where I would have said that you definitely wanted to sell most, if not all, your position here, sitting at that $12 mark. That was a level that I would have said that hopefully you ended up taking your profits. Because as you would have saw, that was the last level that you had consolidation to distribution before you ended up breaking down to make that low dating back from May 16th. All right. So $12 was that key mental number for the upside, but the key breakout level was sitting basically around 860 was that breakout level that I would have said, yeah, you could pretty much take a position on that to go long towards $12. But that was a beautiful one. Do I expect continuation? As you see, it faded pretty hard. Now, I would look to see if we get more downside here into the morning here. Do we end up getting back down to this 860 spot to retest that breakout spot as a support? Or do we break back under 860 here? In which case, this squeeze basically is going to be pretty much finished. All right. So 860 is pretty much your line in the sand right now. Otherwise, continuation, you're looking at that to break back above $12, because that is your pretty much your tough resistance right now. All right. Diego, you mentioned CVS. Let's take a peep. CVS. Let's take a peep. CVS had a pretty nice day. Up about almost $1. It's not that bad. You did get that downturn break, so that was pretty much very pivotal, dating back towards the last high that you had meaningful was from May 26th. So you ended up breaking above that. Now, where do we pretty much see our resistance here? I would pretty much see my resistance sitting right around this level here. This would be my resistance in terms of maybe your further upside. That currently sits right around that $96 mark. If you're looking to get a further on breakout, you want to see this break back over 93 half. You get a break over 93 half, then we can start talking about that $96 level. Otherwise, your short-term resistance right now is going to be sitting at 93 half, and that's where I would expect to get a pretty strong rejection. And reason being is because you see that prior breakdown that you had, you ended up testing that level of support before you broke down, retested as resistance before you got the strong reversal. And that was the exact same level once you started to decline. You ended up teetering as support to resistance before you continued to make further lows. So you definitely want to see this break over that 93 half. If you can't break over 93 half, then I would expect that to be the rejection to pretty much give you a reversal back to the downside. Otherwise, you break over 93 half yet again. Like I said, you're looking at 96 is your next target. All right. But that's definitely a pretty good one. I would just play off that risk reward being once it gets towards 93 half. All right. Let's see what else. A little bit of everything. Microsoft, Apple, and Amazon. They look like rising wedges. Any thought? Here's the only thing about rising wedges, and I agree with your rising wedge scenario. I definitely agree with it. Here's the only flip side about rising wedges right now. I don't necessarily believe in rising wedges, especially in bear market rallies. The reason why is because just like I've seen a lot of inverted head and shoulders actions get invalidated during a bear market, I've seen a lot of rising wedges also break to the north. So even though they're pretty much swayed to break in one direction or the other, don't get too swayed about that. That's why at this kind of point in time, one thing that I've been very critical about is being careful with your swings overnight, and two, just taking it level by level, right? So just play it by level. If it breaks this level, it's going to go to this level. Don't try to get too caught up with those kind of patterns in particular, the rising wedges and inverted head and shoulders. That's pretty much where I kind of don't trust them in this market environment. If it wasn't a bear market that we're overall into this year in particular, I would have said, yeah, that's a rising wedge. It's likely going to end up breaking down. You draw your trendline support, and you likely look for that breakdown. Even though I would say that you should still draw the formation to make sure that it ends up breaking north and not south. But that's basically what I would say is that I don't have too much trust in them. Is my bottom line. All right. Other than that, what's going on, Randy? Drake, so I work at Genrock, and I think the stock looks interesting with a fair market value of 275, and it looks like upside from here. I have not looked at Genrock kind of probably in ages. See if I can actually remember how to spell the name here. Why did I actually spell that wrong? GENERAC. I have not looked at this ticker, and probably because one fact is that it probably doesn't have liquidity. That's probably one of the biggest reasons I probably never looked at it. But I definitely want to look at it probably from the weekly to give you a better scenario of what my projection is. So one thing that actually looks pretty solid right now is that you do have a pretty solid base right now. That's one thing that kind of stands out to me that you've literally anchored right off of would be that support level that you kind of smacked your head on right around that 202 spot. And thus far, you've had a strong reversal off of it. So the fact that you had a strong reversal, I think that that's pretty much a very strong point. Now, where would you need to break over to kind of give you that upside scenario that you're looking at for right now? I would say that you basically need to get over this level right here. This would be where I have more confidence in terms of a stronger reversal. If you're really truly trying to call a bottom, and I'm assuming you're trying to do it for the long term here, if you end up breaking back over this spot here of this 237, 238 spot, that's when I would feel a lot more comfortable about that. Reason being is because you see that you have basically had a retest here of that 202 spot from dating back from December of 2020 that you tried to get a breakout, but then you ended up basing. You got a little bit of a test of resistance here. You dip back below and then you got that breakout. But then if you kind of get back towards a scenario where we have from April this year, you ended up breaking here as a support to resistance spot at that pretty much that crucial 238 spot. So I would wait for that to break over 238 before I say that you have full on upside and there's not more downside to come, meaning that you're not going to retest this 202 spot for further downside. If you break over the 238 spot, that's when I would say that you have further upside, and of course you have that nice little tiny gap fill sitting over 254. But 237 would be the line in the sand here, where I would say that I would pretty much try to go long on Generac here. But if you can't break over 237, I don't think there's anything kind of stopping you from retesting 202 once the market gives us a pretty nice reversal. All right, that's the only thing I would say right now. So line in the sand, like usually how I say is level by level. 237 will be that level in which I will change my mind to say that this is gonna get further continuation to the upside, despite the broader market once we get a U-turn. All right. Obviously, we need breakout of a bear market as well. That's the scenario where I have no trust in that, Randy. If I'm being completely honest with you, I don't have trust that this entire move that we have to the upside right now in the entire broader market. I don't have any trust that it's going to end up holding. This is why I say, I've been skeptical on holding overnight here as we kind of get to the end stage of this bear market rally that we're in right now, quote unquote. I would say be cautious about what you swing and your position size. All right, just taking it level by level. That's the best case scenario that I can tell you right now because it's not going to be pretty once this bear market rally is over, and we're gonna wake up one of these mornings where SPY's likely gonna be down 7, 10 points, and we're gonna be like, okay, bull market rally, so bear market rally is over, right? And that's where we're gonna have the flip side right back to the downside. All right. Other than that, I think I kind of covered everyone. Wayne, you mentioned Chewy. Chewy was actually one that I think it had pretty strong sentiment the past few days here. That had a beautiful reversal. I see that I had something highlighted. I don't know from how long ago that was. Let's see how long ago that was. Actually, yeah, I had this actually kind of completely mapped out. You had a beautiful little double bottom action as the two little circles kind of highlight here on Chewy. You had a nice little downtrend break. You broke over, retested, got a little bit of a continuation before you drop back down, tested that downtrend resistance uh, as support yet again before you had continuation. As you usually see that I kind of have level by level here. At the time that I was watching this, I was basically watching it down on the fact that it was down at what $28 and change. I had it breaking, looking for the breakout over 29.5 to get a push towards 31.26. And above that, you see where I basically had my supply level currently sitting. So my current supply level that I had at the time was 34.5, basically, you could say. Now, this definitely got a larger move than I definitely anticipated here. So where do we pretty much particularly go from here? If I'm kind of giving you that better case scenario here, the level that I'm kind of watching here is kind of where we've already just smacked into right now. That will be the level in which you see that you've tapped your head as support, dating back from January 24th, again February 24th, and then you got a beautiful little reversal bottom back from March 15th as well. So you hit your head right into supply here. I did not expect it to extend that far and that much to the upside here, but basically that 37 level was your pretty much your hard resistance. If you're looking for further continuation back to the upside here, if we're pretty much saying that we have more legs, then I'm basically looking for this to break back over 38 here. 37.75 to be exact would be the level that I'm watching here to get further continuation to the upside here. Otherwise, I think that's where your resistance likely hits, and we start to see this chop before the market kind of gets its last legs before U-turn ends up happening. So I do think that this was what a beautiful reversal, strong continuation that we've had thus far. But do I think it's coming right into a resistance right here? Yes, I do. But 37.75 will be that line in the sand where I say maybe we do have another possible leg to the upside here. All right. Jesse, what's going on? You kind of mentioned. Should we have any catalyst for such a strong move? I heard chatter about it on CNBC and whatnot. I don't know if there was a headline in particular that kind of caused it. As you see, I didn't have it extending that far, especially that quickly. As you just saw, it literally just went vertical. I did not expect that kind of vertical action. It literally jumped about from what $33 up to about 39. I did not expect that kind of move out of it. If I kind of see if there's any headlines, just looking at this, let me see if there's anything in the past few days. Facing limit. All right, so it looks like about 2 days ago, it looks like there is some news from Wedbush. Maybe that might have been what was pretty much the catalyst for this. But they basically just said that earnings face limited downside risk, and that might have been the trigger in which caused buyers to pretty much step in. So that kind of seems like the headline that I'm looking at right now. They didn't have earnings just recently, so there's nothing that kind of tells me about that. But bottom line, 37.75, that's the level that I'm watching here. Let's see if we break back over that or basically retest it as resistance and reject. All right. Let's see what else. Jesse, you said TQQQ. Let's take a peep. Let's see what TQQ is looking at right now. I like how you're going to the ultra short. That's pretty nice that you're looking at right now. Let's see what we have right now. So kind of gives you a little bit of that same scenario as I was mentioning with SPY. Not that I necessarily trust it, but you do have a little bit of an inverted head and shoulders action that's kind of playing out here. Levels that I'm pretty much would be watching here for the triple Q here, T triple Q, would be basically breaking out of this spot that I'm looking at is 27.72. 27.72 will be the level in which I would say that you have a further breakout that's on the horizon. Otherwise, I would expect that 27.72 to basically be that 25.72 to basically be your resistance right now. Otherwise, if you break over the 2772, the 2572, then you're likely looking at towards this gap fill. Gap fill is looking at 26.75. In terms of basically your supply that I'm looking at here, just basically watching off of this little 2 hour right here, I would basically be saying that you're likely looking at a small little supply zone sitting right upon the completion of that gap fill, but basically sitting right around 26.85 is where I would say is your roughly about your 2 hour supply here right now. So that does give you about a near $2 upside here on T triple Q. But 25.72 needs to break, and then you can start looking towards that gap fill. All right. If you can't break 25.72, then that's where I would expect. It is a possibility that this little inverted head and shoulders action that's kind of presenting would end up failing, and we get a U-turn back to the downside. All right. Other than that, though, I think everything else is kind of up in the air. Let's see if the bear market rally truly continues tomorrow. It's been one hell of a rally. I gotta say, we had beautiful dip buy opportunities. Yesterday, we saw the red to green action. Today, they kind of flashed a little bit of a flip side from that red to green to red, but that was a beautiful dip buy opportunity that we had today. So let's see what the market wants to give us on the 0 day Friday here tomorrow, how we close out the week. I would pretty much anticipate that we close it out pretty strong. And then we'll see if there's any kind of turmoil in the markets here come next week. In which one thing that I will say, since I'm not going to be here on live tomorrow, do not swing anything over the weekend. That's pretty much what I would say. I think you're playing with fire swinging over the weekend. Even if you kind of have confidence, I think you are playing with fire because it's going to be something drastic in which, whether it be a headline or some sort, that you're going to see a whipsaw action one of these mornings back to the downside. And I would hate for anyone to wake up like that uh, any kind of morning. All right. So, other than that, I'll leave you guys with that. I'll kind of wrap it up there. But